Hi everyone, welcome back to the channel. Today we've got some exciting updates on the Forex market, specifically focusing on the recent movements in the US dollar and the Japanese yen. So before we start, I just want to ask you to subscribe to the channel, give a thumbs up on this video and share this video with your friends. Now let's talk about the US dollar strength that it's having in the last couple of days. The US dollar has been on a quiet run, maintaining its robust performance. Indeed, overnight trading, we saw it reach strong levels thanks to the release of a more robust than expected US payroll report last Friday. The positive momentum drove the USD JPY pair back above the 146 level. Indeed, it did surpassing the low record on December 7th, one day before my birthday actually. Notably, the increase in the US Utes played a significant role, especially with the two, as well the 10-year Treasury bond yields, experiencing notable upticks. This all lead us for the Fed rate cut expectations. Well, to be honest, the unexpectedly strong, I would say, US payroll report, it did prompt a recalibration of expectations for the Fed rate cuts in 2024. The implied yield, I would say, on the December 2024 Fed fund futures contract increased by 17 basis points, now indicating around 108 basis points of rate cuts by end of the upcoming year. However, it's crucial to note that expectations for the timing of the first Fed rate cut, fully priced in by the May 1st FOMC meeting, remain unchanged. All right, so we most likely going to have a rate cut in the May 1st FOMC meeting, and this of course will drag the dollar down. Now, the household survey and unemployment had a surprise. It revealed a robust rebound in unemployment, and by 747,000 in November, significantly overshadowing the decline in October. The increase in household employment outpaced the growth in the labor force, and indeed it did, result in a decrease in the number of unemployment individuals, and of course it did a drop in the unemployment rate to 3.7%, if I'm not wrong. Despite this, the gradual increase in the unemployment rate through the year has alleviated upward pressures on wages, providing, of course, the Fed with a little bit more, I wouldn't say 100% more confidence, but a little bit more confidence in the balanced state of the labor market. Because remember, I always say what they want to do is they want to bring inflation down with economy stable. And of course, they need the labor market to be stable. But looking ahead, what's the Fed perspective? Well, looking at the broader context, okay, we did have the November NFP report considered a small setback. Makes it unlikely for the Fed to fully endorse the current scale of rate cut expectations, pricing to the US rate market. Historically, context from the September FOMC meeting indicates a median projection for 50 basis points of rate cuts next year, with the policy rate expected to peak at 5.6% at the end of this year, 2023, just more 2 weeks, before falling to 5.1% in 2024. So recent improvements in US inflation may further influence the Fed to signal a lower median projection, potentially indicating 50 or even 75 basis points of cuts next year in 2024, right? And now the most important, of course, I will discuss all of this on my webinar tonight from 6 to 7, but the upcoming US CPI report. Guys, keep an eye out for the upcoming US CPI report for November. It's anticipated to be crucial in determining whether the Fed will signal more rate cuts next year or not. Remember, it's not about December FOMC, it's about now 2024. Remember, I've mentioned this yesterday. We did have some evidence of slowing core and services inflation. If we do have evidence of slowing core inflation, will be the key shaping the market expectations. Overall, these developments are expected to continue providing support for the US dollar in the near term, making it challenging for the US rate market to price in more aggressive rate cut expectations. All right, so if you want to know my full breakdown analysis on the Japanese yen now, because we did have a Japanese yen movement, very, very strong today. Actually, it was yesterday. Please register for my webinar. It's going to happen in exactly 4 hours from Sydney time. So we're going to start at 6. It goes most likely 60 minutes, 50 to 60 minutes, so 1 hour. And I guarantee that it will be helpful for you to understand what is happening around the world, okay? Around the G8 as well, emerging markets, especially gold. If you are a gold trader, I'm gonna be talking about gold and his decline that we saw this massive spike up and now this huge rally down. I'm going to be talking about all of those things tonight from 6 to 7. All right, please, again, subscribe to the channel, give us a thumbs up on this video, and I see you tonight.